You're listening to The Bird Bath, presented by The Fountain Report. I'm your host, Ryan Leach. Welcome back to The Bird Bath. Each week, we scrape the surface of the news you need to know, so let's get into it. This week, we had the wonderful opportunity to sit down for an exclusive interview with the CEO of Petfolk, Dr. Audrey Weistrach. Audrey's been a spectacular supporter of the show since the beginning and a good friend of mine and someone that I really appreciate getting the time to meet with. And this was a really cool week for them last week. They announced their Series C funding led by Deerfield Management and raised $36 million. So we sat down with Dr. Weistrach for a bit of an interview to dig into a bit more about what this funding means for their group. Audrey, thank you so much for taking the time to sit down with us. I know how busy of a week it has been, and congratulations on the funding. First off, as we look at this, 2022 and 2023 were tough on investments in the vet space. 2024 has seen a resurgence in investments for veterinary practices. And Petfolk, though, was able to continue steady growth even as other groups slowed their acquisitions and new build strategy. What do you attribute to that difference?
Great question, Ryan. I think the way Petfolk approaches things is just fundamentally different from the traditional industry model and certainly very different than the acquisition model. While we've seen a lot of consolidation in recent years, the rising costs and interest rates are making that strategy far more challenging. But for us, it's not about acquiring more. It's about reimagining pet care from the ground up with a bold vision and an unwavering commitment to our people. After 30 years in veterinary medicine, I've seen every kind of practice model, from solo veterinary practice to corporate settings, from farm calls to building de novo clinics. One thing for certain that I can tell you is the heart of any successful practice is its people. At Petfolk, we put our care teams first. We create an environment where they're empowered to practice the best medicine and where their passion and expertise can really shine. And I think we've built some incredible programs. For our experienced doctors, our partner program opens the door to ownership, while our training programs give new grads the foundation to grow. This isn't just a job for them. It's a community, a movement, and a purpose. I think that the Petfolk way is a bold, modern approach to veterinary care, driven by innovation, passion, and a relentless focus on our people. We're not just building clinics, we're building the future of pet care.
Very interesting. So Petfolk has brought in significant investment from investors. Do you expect to continue to utilize outside capital to fund growth, or is there a near-term goal for self-sustained growth?
Ryan, when it comes to funding, Petfolk is in a fantastic place. We've been fortunate to bring on some incredible investment partners who believe in our vision. Our newest partner, Deerfield, is deeply committed to healthcare, and that's important because at our core, Petfolk is a healthcare company bringing an elevated, convenient experience to our pet parent. What really stands out is the continued support from all of our existing investors who chose to reinvest in Petfolk. That's a huge vote of confidence. With the investments we've received so far, we're set to keep expanding and hopefully bring a Petfolk to a neighborhood near you soon.
All right. And finally, what do you want people to know about Petfolk that they might not see when reading these massive and impressive headlines?
Well, I think first and foremost, you know how much I love the veterinary industry, and building Petfolk has been such an incredible journey, full of vision, challenges, and a lot of heart. Behind the scenes, there are countless decisions, pivots, and unknowns that go into shaping a company from the ground up. As a founder and veterinarian, it was so important for me to create something different, a business built by vets for vets with a foundation rooted in people. Petfolk is all about empowering our teams, creating a supportive environment where people can thrive and grow. And I'm so proud that Newsweek recognized us as the 5th most loved workplace globally. I'm just excited about the future of veterinary medicine and the possibilities for our pet parents and our care teams and our vets.
Again, thank you to Dr. Audrey Weistrach and the entire team at Petfolk for sitting down with us and organizing an interview on such a busy week that they had here. It's always wonderful to see people that are dedicated to success and growth within the vet space continue to see wonderful things happening for their groups. Our next story is a bit of a conglomerate. No, that's not the right word. A mashup of a lot of different news, but this last week was a big news week for stocks and earnings reports. And if you're going, shh, Ryan, who cares? Well, I do. And it's my show, so let's do it. So there were a few big companies that put out their earnings reports. And the thing that I always like to look at when I'm looking at these and things that I recommend everyone else look at, if you're not economic minded, which I wouldn't say that I particularly am, and my wife, when it comes to tax season, would definitely say that I'm not good at those sort of things. But what I think is interesting to look at is sort of two numbers and two factors while looking at different stocks and performance of the companies. You can look at their year-to-date growth as well as their annual growth or decrease in their revenue, as well as I like to look at where their stock price is on a year-to-date basis, as well as where it was pre-COVID. Now, we're starting to get to almost 5 years. And in about 6 months, we'll be at 5 years post the shutdown dates of COVID. And it's been pretty interesting as I look through all these different stocks and compare where they were pre-COVID. So I always look at their numbers on March 1st, 2020 or end of February 2020 to where they are today. So first off, we had Merck do their announcement. And Merck's really interesting when you look at this because they obviously have a massive human healthcare side of the business. Their company was aided by some really strong demand for their cancer drug, Keytruda. And then they also highlighted in their quarterly earning report that their animal health business was a big piece of the overall growth. Their revenues for their animal health sector were $1.4 billion, and it was an increase of 6%. Their overall business continued to look up, but interestingly enough, their stock didn't really contribute or stay along that same positive news. And it was actually trading down after the news. Some of that can be affected by concerns over what we all know is coming up. And this is on Tuesday, November 5th that we're putting this episode out, but elections in the US and what that can mean for other businesses. Another company that put out their earnings report was IDEX. IDEX announced their third quarter results and their revenues were up 7%, which was $976 million. They had an increase of net income of 10%, and their companion animal group was up 7%. Their stock was down year to date, but as I said, I like to look at this compared to the pre-COVID numbers, and they're up 65% on pre-COVID numbers. So yes, they are down a bit year to date, but if you bought IDEX stock in beginning of 2020 or even 2019, 2018, 20, whatever, you would be over 65% up on where you were there. So things are still trending up and looking really good. A lot of people are familiar with Colgate-Palmolive, and that is also the parent company for Hill's Pet Nutrition. The nice thing about Colgate is they'll break out what Hill's is contributing, and they showed that there was a 6% increase in the business, and Hill's operating profits were up 28%. So lots and lots and lots of good news. There's two more companies that I want to hit on. One, which is one of the big dogs in the space, which is Zoetis. Zoetis reported their revenue of $2.4 billion for the third quarter, which was an increase of 11%. Kristen Peck put out a great video, which is kind of fun to see a human side to these stock numbers. And in the video, Kristen Peck said, "We achieved 15% revenue growth in the US and 13% operational revenue growth internationally, with both our companion animal and livestock portfolios seeing impressive global operational growth, 15 and 11% respectively. Our track record of above market growth speaks to our relentless focus on innovation and execution and the dedication and commitment of our colleagues." The final company that put out their numbers was Trupanion, and you guys have all heard me go on and on about the pet insurance space, and this is no different. But Trupanion saw an increase of 15% of their total revenue and was able to report a net income of $1.4 million, whereas their prior year quarter was a loss of $4 million. So good news for Trupanion. That's an interesting one to see. It shows that despite some of the hurdles and the headaches and the ups and downs that we've seen in the pet care or the pet insurance world, that Trupanion is seeing a net income, which I always like to see companies in an opportunity to make money and continue to grow. Finally, if all of this kind of news is interesting to you or something you want to stay on top of, there's actually a really cool ETF called PAWS, which is the Pet Care Industry ETF. PAWZ is the ticker that it's traded under. ETF that puts together a lot of the different pet care companies in the space and allows you to sort of trend where the entire industry is going. And that ETF is up nearly 10% for year to date and way up over pre-COVID numbers. So pretty interesting one to check out. It's something I know that I like to trade in because I like to keep my eye on it. Plus, I also just own one share of everything that's out there as a great way to make sure that they send me the updated reports without having to search for them. So check that out. Always something fun. And also, if I have a lawyer on staff, this is my asterisk saying I am not telling you what to buy or sell or anything like that. But I do think it's always fun and interesting if you're in the industry to make sure that you trade on the same stuff that you know and that you feel confident in. If you're into trading cards, your next ones might feature LeBark James, Lionel Meowsy, Steph Curry, or maybe Babe Ruth. If those puns weren't enough to get you to turn it off, well, Topps, which is Fanatics Trading Card Company, which is the company that if you were a kid that ever had trading cards, you probably had Topps trading cards. They've partnered with the Westminster Kennel Club to release a line of Stars of the Show, which featured dogs that starred in the Westminster Kennel Club's annual show. So the neat thing that was kind of cool about this, they have something called relic cards. And I guess if you're into trading cards and trading sports cards, you probably know about this. But what they do is they've actually included small pieces of memorabilia. They have traditionally wood used from the bats, or they have game worn jerseys, but the Stars of the Show card and the Best in Show cards that Topps is bringing actually have small pieces of the Best in Show ribbons. They have cards with the purple winner's label lapel inserted into the card and a lot of other things. So it's kind of a fun idea here as a lot of things are moving to the digital world. We're seeing a resurgence of the utilization of physical trading cards, and now we're seeing some world famous pups featured on them. The senior vice president for Topps said, "What the cards do is they capture a moment and connect you with the hero. Heroes come in all different forms, and in this case, it's champion dogs." So that's kind of a fun one. I know this is going to be a pretty heavy week for a lot of people. We've got the major election coming up. And if you haven't voted and you're listening to this on Tuesday, November 5th, turn me off or put me on in the Bluetooth in the car and drive and vote. This is important. And if you're in the US, it's a really cool thing that we get the opportunity to participate in the democratic process. No matter what side you're on, I always think it's worth participating in. And if you enjoy hearing me talk, or if you want to hear other things that I think are really important, I had the wonderful opportunity to be on Dr. Andy Rourke's show this last week. His show, The Cone of Shame, which is super fun. Andy is a really incredible person to be able to sit down with. And I'm going to make sure that I put a link to that episode. We talked all about what's going on in consolidation. We hit on the European market, some crystal ball trends that we think might be coming to the US market, and much more. So if you want to hear that, check out the link in the description. And then for more on these and other stories, join us by subscribing to the Fountain Report, and also check out our new Substack. There's a link to both of these wonderful publications in the bio. And don't miss out on any episodes by subscribing and rating the show. For the Birdbath, I'm Ryan Leach. See you next week.